All right. Today's SPY was down 1.2%, and I'm starting with the zoomed out view because it's very important you understand how critical this support is that we're coming into. And just a quick reminder, the simple way to view the market is just stay risk off below SPY 420, which means you don't need to bother trying to catch any falling knives, and you don't need to bother trying to buy at any support levels while SPY is below 420. However, I do want you to be aware of the current market structure, and I'm going to go through this very quickly, so try to pay attention because right now SPY is sitting right around this level at 414, and if you just look to the left of the chart, that is the level that we had to break through to get out of the bear market. And once we broke through that level, we had a very strong bull rally, which is now starting to correct and coming back down to that level at SPY 414. So usually when you get a breakout in technical analysis, you usually come back and test that breakout before you continue any trending. So there is still going to be a possibility that there is a strong demand zone in SPY in this zone between 414 and down here right around 411. Now that does not mean that you just blindly buy a falling knife and then hope for the best. If you are going to buy within this zone, you still have to manage your risk accordingly because of course there's always the possibility we slice right through it and then start to see even more high volume selling. But do be aware this is a very critical center of mass in SPY, which is going to lead to plenty of demand. And just because there's demand in this zone does not mean it has to hold up as support, but it does significantly increase the probability. So bigger picture, we had the head and shoulders breakdown. We lost the critical support at SPY 436. We continued lower and lost the support at 430. And then we continued lower and lost support at 420. And this is now 3 lower highs and a downtrend and risk off below 420. But now if we zoom in, if you are going to pay attention to lower support, we are looking for this potential support right here at 414 and 411. And then below that, we have a gap fill at 407 and another support at 404. This is all going to be very critical support and what could be very critical demand. However, we are still viewing the market as risk off below 420, which means you have no reason to catch this falling knife until we see some kind of trend shift of higher lows and higher highs. So it's up to you how you want to play it. There's plenty of ways to manage risk, whether you're catching a falling knife or you're shorting below 420 or you're trying to buy and manage risk around support. It doesn't matter. The key takeaway is no matter what you're doing that you're managing risk. So there's really nothing else to say. To the upside, we need to break back above 420 and it is possible on the way there we could have resistance between 416 and 417. So there is going to be a little bit of resistance, just a bit higher, but the key takeaway is that we need to break that resistance at 420 and start to put higher lows and higher highs to say that the bottom is in. Whether or not this is going to be a bottom is to be determined. If you're going to assume it's a bottom, just manage your risk in case we continue to fall. And right now, a very critical risk level would be right around SPY 411 to 414. And if that fails, then we should easily get down to 407 and then 404. On the NASDAQ 100 triple Qs, we were down 1.91% today, and the triple Qs were risk off below 355, which meant we were easily going to 347. And then below 347, there's a good chance we were coming to the rising 200 daily moving average. Now, just because we could be going to the rising 200 daily moving average doesn't mean we need to go straight there, and we are getting a bit oversold outside this Bollinger Band and slicing right through 347. So there's always the possibility we could get a bounce to a lower high and then still come down here towards the 330s, especially while the Qs are trading below 347. So as you can see, these are risk-off looking charts, so you should continue to trade as a risk-off trader, meaning you're either shorting at resistance levels or sitting in cash until we reverse the bear trends. On the Dow Jones, we were down 0.77% today, and below 331, we were supposed to go to 327, and that's exactly what we did today. And if we continue any lower, we're looking for the gap fill down there at 322. Bulls need to break the resistance at 331 and then 336, and then if we can break through that resistance and reverse the downtrend, we possibly can start to consider that a bottom is in, but right now this is still a falling knife look of lower highs and lower lows. On the Russell 2000 IWM ETF, we were up 0.26% today, and the IWM is sitting at this critical support at 164, which could be a bottom, and this was the bottom in 2022, but if we break below it, that means it's another lower low, and then we would be breaking the low of last year's bear market, which means we would start to flush down towards 157. If we do start to bounce from here, it could be a very impulsive bounce back up towards 170, but that's going to be critical resistance. On the ARKK ETF, we were down 1.31% today, and we continued lower below the gap fill at 36 and hit the next support at 34.6, and if that fails, we're likely going to 32.5 and then the gap fill below 32. Bulls will need to bounce it and get above this previous high at 38, and then we can start to say possibly we're breaking out of the downtrend, but until that happens, do keep in mind this is a very powerful bear trend. Today, the VIX was up 2.43%, and we did get another close above 20, which is confirming we have more fear in this market, but we didn't see the VIX spike and close near the high. But you still need to be cautious while the VIX is above 20, and it's only if the VIX starts crushing all the way back down below 18, we can possibly say that a bottom is in, and then we're starting to reverse the downtrend. On Bitcoin, we're currently down about 1%, and Bitcoin is still struggling to break that resistance at 35,000, which is absolutely no surprise because we're way outside the upper Bollinger Band, and it's still bullish as long as we can hold above 32,000, and don't rule out the possibility we need a higher low before we can continue any higher. On Tesla stock, we were down 3.14% today, and we're still risk off below 214, and we're definitely risk off below 207 because it means we could be coming down here towards 197. In Tesla stock, you really need to see some type of reversal of this downtrend to get more bullish, which means we'll need to put a higher low, break the previous high, and then we can start towards 230 in the gap fill at 242. On Apple stock, we were down 2.46% today, and I told you below 174 there was a good chance we were going to fill the gap at 167, and that is exactly what we did today. So from here, there's a good chance this could have been the bottom, but if we continue any lower, we'll be looking for support down here right around 163.4. If we start to reverse from here, we need to see higher lows and higher highs, which will look something like this. And then that could tell us we could be breaking out of this downtrend, which means we need to break that resistance at 170 and then the previous resistance, which was the old support at 174. So jumping back over the S&P 500, this is risk off below 420, so just be very cautious. This could be a falling knife going much lower, but we are getting into some very critical support zones down here in SPY that you could pay attention to. And if you're willing to try to catch a falling knife, these are the critical levels you should be paying attention to. And as long as we can hold above those, we could at least get a bounce to a lower high before we continue any lower. But as always, no matter what you're doing, whether you're long at support or short at resistance, just manage your risk. And just keep in mind, this is a downtrend of lower highs and lower lows until we see some type of reversal. So even if you are taking long trades, don't hold on to them too long because there's a good chance they're just going to be a lower high before the next lower low. If you want to come crush this market, consider joining the Stock Channel Discord or Bank Trade Alerts. And with all of this recent market volatility, now is the best time to join Bank. So if you've been considering it, I would suggest now would be a great time to do so. You can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.